Shares of Clean Science rebound from lows after the company clarifies to CNBC-TV18 a punching error from Spark vendors had led the street to believe 6 crore shares had changed hands. The company confirms the block size is only 24% equity.
RailTel and Jupiter Wagons trade higher after order wins. RailTel secures 2 orders worth 50 crore rupees, while Jupiter Wagons receives letter of intent worth 215 crore rupees for Vande Bharat wheelsets.
Shares of Prince Pipes rise after Motilal Oswal's buy rating, citing recovery in the domestic pipe sector, while Interglobe Aviation trades under pressure after Kotak Institutional cites weakness in the recent data points.
And Nazara Technologies continues to slide for the second consecutive day after the Lok Sabha passed the Promotion and Regulation Online Gaming Bill that will be banning real money gaming.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Vinny. And Vinny, it's a good-looking screen. I was going to say Vinny's good-looking, but Vinny, it's a good-looking.
I'll take that also. Thanks for the compliments.
Well. But just take a look at that. All the indices that we can see well in the green. And it's looking good, actually, Vinny. And I think the bigger point is we've recovered from around 24,350 to around 25,100. And those shorts are still in the system. So the markets can just hold on. Those shorts, they'll be forced to cover out. And at least as of now, it's a good morning.
A good morning, and good morning to you as well, Nigel. 25,100 above that mark. So I think now, does that become an important level that we'll track as well, right?
Indeed. Positioning was such that 25,100 will be protected from a bearish perspective. That's why the bulls are driving home the advantage. In fact, in the first 10 minutes of trade, that got sold into. But, we just see that recovery has come about, and you have the couple of large parts of the market that are firing. Reliance Industries, that's moving towards a 20 DMA. If you pull up that chart, you have the Nifty Bank that's up, moving towards its 20 DMA as well. And tech, with all the bad news that we've been hearing, that's actually holding up. Both the Nifty Bank as well as Reliance Industries are around the 20 DMA mark.
That's supporting overall the up move today that we're seeing as well. Just in terms of the sector that is not doing well today, just pull up FMCG, right? Because we've seen whether it's a Nestle, Dabur, Emami, Tata Consumer is a bit under pressure today. And apart from that, diagnostic stocks today also seem to be under pressure. There's no specific news flow that is coming in here, but Dr. Lal Path Labs, Metropolis Healthcare, they're also seeing some bit of a pressure. But all in all, a good day coming in terms of the move that we've seen so far in the first couple of hours of trade right now. But let's welcome on board Sachidanand Dutekar from Trade Bulls for a check on the market on the technical front. Sachidanand, good morning and thanks for giving us your time. 25,100, important level. Today is Nifty, weekly expiry as well. What are you keeping an eye out on in terms of the Nifty as well as the Bank Nifty?
Good morning, Vinny. Good morning, Nigel. And during this week, we were of the opinion that the Nifty could scale towards 25,160 levels and probably could extend the rally towards 25,400 during this particular August series itself. If you look at the overall development on the price, there has been a very confident crossover of its 5 and 20 exponential moving averages. In fact, if you look at the base itself, we have seen some confident put writing at around 25,000 levels itself. So I think the base has now shifted from 24,800 towards 25,000. And that's why we believe that even at this particular juncture, one can still aggressively position oneself on the long side. Keeping an eye on the target of around 25,400, we are recommending building fresh long positions. One can keep a stop loss at 24,980 on closing basis. The significant development has been from the Nifty Bank. If you look at the last 3 trading sessions, the range was contracting. But if you look at the daily RSI, the daily RSI was improving. So this was a good sign that this particular index may eventually witness a breakout. So I think today, if you look at the convergence of its short-term averages 5 and 20, this is a good sign that there could be momentum in the offing, and that's why we are recommending building fresh long positions when it comes to Nifty Bank as well. From a trading perspective, we may see a swing towards 56,400, but eventually we are of the opinion that this rally would extend towards 57,000. The contraction has been really good. One can keep a stop loss at 55,730 on a closing basis and build aggressive long positions even in Bank Nifty.
Got it. Okay. All right. Aggressive long positions on the Nifty Bank. That's going to be important because that's been a bit of an underperformer. Sachi, but what about individual stocks?
Good morning, Nigel. Nigel, ICICI Bank, I think, it has been, lacking on momentum. But if you look at the overall structure, the stock has defined a very strong range. On the higher side, 1480 acted as a resistance. But on the lower side, it has managed to, develop a support somewhere close to around 1430. Now, even here, we have seen a positive crossover on its 5 and 20 exponential moving average, which is placed somewhere close to around 1430 level itself. And even here, the RSI on the daily scale has shifted or, displayed a breakout above that 50 level, which is again a significant sign of trend improvement. So we are of the opinion that ICICI Bank could extend its rally towards 1480 eventually. From a trading perspective, the target is placed at 1466. We are recommending building long positions with a stop loss at 1436 on the lower side. The other stock on our radar, which we have also recommended to our clients, is Grasim Limited. Now, if you look at the overall development since August 2024, the stock was finding itself difficult to surpass that 2900 mark. In fact, if you look at the overall structure on the weekly and the daily scale, this looks like a classic rounding bottom formation on the larger degree. And even if you look at the short-term, price action, we have seen a breakout from a bullish pennant formation on its 60-minute scale. So overall, the development has been really good. We are expecting that the momentum can extend towards 2970 from a trading perspective. One can keep a stop loss at 2830. But from a positional perspective, we may see this particular rally getting extended towards 3060. And hence, we are recommending building long positions in Grasim. Stop loss would be at 2830. First target 2970. Second target would be 3060.
Okay, Sachidanand, thank you so much for joining us, giving us the view on the market as well as the two stocks, ICICI Bank as well as Grasim. Thanks so much for joining us. But let's shift focus now to our special segment where we will get you a few ideas for profit from Money Control Pro. Lekha is joining in with us from moneycontrol.com to talk to us about the stock that she has been tracking closely. Lekha?
Yes, so we are positive on KIMS Hospitals, which delivered a strong performance in Q1, despite it being a seasonally lean quarter. The company posted a robust 27% YoY growth in revenues, driven by healthy inpatient volume growth of 15% and a 12% rise in ARPOB. Although its EBITDA margin declined by over 300 basis points, which was due to cost associated with the commencement of new capacity, as it added 320 beds in the quarter. The company is in the midst of a transformative growth phase with plans to expand its bed capacity by 42% to 7,800 beds by FY27. While the ramp-up of new facilities in Nasik, Thane and Bangalore may create a short-term EBITDA drag, management remains confident that these units will reach EBITDA break-even within 12 months. Moreover, as the new facilities mature, the company expects operating margin to stabilize between 22 to 25%. KIMS is also enhancing the efficiency of existing hospitals through technology integration and a focus on high-value specialties such as oncology and maternal care. Now, this dual approach of expansion and specialization positions KIMS to capture high-margin business and sustain elevated ARPOB levels, especially as most new units are cash and insurance-based and not impaneled under the government schemes. The stock is currently trading at 27 times FY27 estimated EBITDA. Given its strong growth trajectory, strategic expansion, and improving operational matrix, we think KIMS presents a compelling long-term investment opportunity.
Okay, all right, Lekha, thanks a lot for that. Well, time to slip into a short break. On the other side, we'll get you more on markets and stock-specific action.
Thanks for staying tuned into Chartbusters on CNBC-TV18. Nifty managing to hold on to 80 points uptick even as of now, 0.3% of gain. Stocks like Dr. Reddy's, that's seen a spike up in the last 30-40 odd minutes. Tejas Networks in the broader end of the market, that's also seen a sharp spike in the last 30 minutes. IGI as well as JM Financials are the other names that have seen a bit of a run-up in the last 1 hour. Now, let's talk about Aurobindo Pharma. That is the one that we're keeping an eye out on as well. We spoke to the CFO who confirms his interest in Zentiva in an exclusive conversation with CNBC-TV18. Here's what he had to say.
Given the clarification to the stock exchange yesterday, it's in the too premature stage and it's very difficult to talk about it. Having said that, we are a global company having major presence in US and Europe, and certainly this asset being placed in Europe, it does fit into our scheme of things. Today, as on date, there is no leverage at all, and we are having an overall cash of around 140, and certainly this cash is expected to go up, and any acquisition will look into the multiples, EBITDA multiples, and whether it is a EPS accretive or whether synergies are there. All these factors we'll take into account, and then we will do that. See, whenever we talk about any business or target, etc., we enter into confidentiality agreement. So I'm not supposed to talk about the numbers. I think as you said, it is very premature. Maybe it may take another 2 months' time. UGR Plan 3, you already in our earnings call, we said we have invited the inspectors to do the inspection, re-inspection. So as and when it happens, we'll let you know.
Okay, all right. Well, time to slip into a short break. On the other side, we'll continue our focus on markets and stocks that are bobbing around. Welcome back. You're tuned in to Chartbusters here on CNBC TV18. Well, let's shift focus then. Sources say the group of ministers on rate rationalization, they're set to meet in New Delhi today. Timsy joins us to give us a quick update on that meeting. Timsy?
Well, yes, the group of ministers on rate rationalization nominated by the GST Council. As I speak, the meeting is underway. It has just started. And the key over here is the centre's proposal that we are hearing from sources to shift to a simple GST slab of 5%, 18%, and a sin rate of 40%. That is on the agenda of the group of ministers. The group of ministers headed by Bihar Deputy CM Samrat Chaudhary has the key opposition ruled states as the composition of the group of ministers, because the major concern that the states have been voicing is the revenue loss. And if you see the composition of the states, it seems the actual composition talks about Kerala, Karnataka, Rajasthan. So Kerala, Karnataka, West Bengal, again opposition ruled states. UP, Rajasthan, ruled by BJP, sitting as a composition in this GOM. So let's see what happens finally. Whether GOM agrees to take this proposal forward, what are the apprehensions that states have, especially when it comes to revenue loss? That is likely to be key. SBI report recently highlighted that a potential revenue loss of 60,000 crore rupees could be with this simplification of GST. Let's see what happens finally. And yes, only after GOM's recommendations, the proposal can be taken forward in the GST Council.
Okay, we'll have to wait and watch for more updates. But thanks so much for this one, Timsy, and giving us the update there. But with that, we're absolutely out of time on this edition of Chartbusters. Thank you so much from Nigel, me, as well as the team who put this show together. Closing with strong green as of now for the markets as well. Don't go anywhere. Trading hour is up next.